Yesterday what we did is we actually just quickly went through depreciation. And it's important for me that you understand this very well, that you know depreciation is an expense, meaning this is what goes to the income statement, right? Yes. Accumulated depreciation, okay, let's go back. Depreciation is an expense and it's only for this financial year. So if I talk year 3, the depreciation is 10. Whereas accumulated depreciation is adding up all the depreciations previously written off. So if I talk accumulated depreciation, you'll see it's year 1, year 2, and year 3 accumulated, added, right? Carry value is the value that's going to go on the face of the balance sheet. How do I get that? I take the cost price. Now let's see quickly if this makes sense. Cost price is the asset, less the accumulated depreciation, which is the negative asset. Can you see? Gives you the carry value. So this is what it's worth at this stage. I want you to understand that. Then I want you just quickly to understand again, when we go at this, there's 2 methods of depreciation. First method will be on the cost price, and it will be the same every single year, right? Because the cost price doesn't change. Second one, we work on the carry value, and they call that one the diminishing balance method, meaning the value is getting less. So then yesterday what I did is I explained to you, this is the old. If I look at the balances, this is my old, meaning this is the stuff I already had in place once the year started. And this is my new. So if I look at the vehicles, I started out having 400,000. I purchased during the year 210. So I ended up with 610. Now if I ask you, calculate for me the depreciation, I'm going to look, what do they say? And they say with vehicles it's 20% on the cost price. Okay, so if I want to calculate, and this is what I did, as I'm taking the new vehicle, which is that 210, ne? I times it with the percentage, I times it with the months I've had it. Now I had it 1st November, so 1st November till 28 February gives me 4 months, and that gives me 14. When I do the old one, I'm taking the cost, so that is the 400,000, times 20% for 12 months. You don't have to write 12 over 12 because 12 over 12 is 1. I just want you to see they are different. They are different. That is why I need to calculate 2 things. If they were the same, if this one was also for the whole year, I could make it 1 calculation. It's that math principle of x plus y you can't do, but x plus x you can. Okay, so the months are different, that's why there's 2 calculations, giving me 94. Yeah, so for the old one it's always 12 over 12 because the old one is the one that I already had at the beginning of the year. Okay, then I told you we are going to do note 3 and we are busy with note 3 here. Okay? So if you look, we took the opening balances for the cost less the accumulated gave me the carry value. I had an addition of 210. I had a depreciation that I calculated 94. So now what is my cost price? Now can you see they actually tell you, because I've got the cost price at the beginning, the addition at cost, and the cost price at the end. So the cost price at the beginning, add the addition at cost, gives me the cost at the end. How much is that? Okay, so if I add those two, the 400 and the 210, it gives me 610. Okay, now the same is also true with this accumulator. Because what is accumulated depreciation? Okay? If I go back here, remember, accumulated is year 1, year 2, year 3. Okay? Every year I add what? I take the old accumulated plus the new depreciation gives me the new accumulated. So I'm going to do exactly that here. I've got the old accumulated, I've got the depreciation, and it will give me the new accumulated, which is 120 plus 94, it's 2. Okay, and what's my carry value then? Cost less accumulated gives me. Okay, I also want you to see the following. Is everybody with me? I want you to see the following. Can you see, if I take the carry value, I add the addition, I subtract the depreciation, then I will get 396. Quickly see. Can I also show you, if you take the 396, take the 396, subtract the 610, then you will get the negative 214. Can you see that's also another method to do it? Because what they like to do in tests is to give you some amounts and leave out some amounts. So you need to know the relationship between all of them. Is everybody sharp? Okay, now, if I go to equipment, can you see that you can already fill in for me this, 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 and this? Ne? In equipment. Quickly go full. Okay, let's mark. No. So if I look, no, you guys, let's look. My equipment is 210. My accumulated is 30. Can you see every time I see the word depreciation, there's a bracket? Yes. 210 less 30 gives me 180. Yes. Anybody with a problem there? Now, the addition is 12. Does everybody know where I got it from?
Yes.
Okay. Now, the only one that's left is the cost at the end. So I know the cost at the beginning plus the cost in the middle gives me the cost in the end.
222,000.
Okay. So now if I look at equipment, I need to calculate the depreciation. Okay? So now what do I know? I have my financial year starting 1st March, ending 28th February. I also know that my equipment started out worth 210. I bought 31st August 12 thou. So end of the year it's 22.2. And you can all see this is exactly what I have. 210, 12, 2022. Okay, now I want to do this on the diminishing balance method. Meaning I want to work on the carry value now. But something very important to write down is if it's something new, I bought it this year, the cost price is equal to the carry value. How does that make sense? Look at this. The thing I bought this year, does it have a cost price? Yes, because I just bought it, so I paid, so that's the cost price. Did I depreciate anything on it so far?
No.
No. So do I have an accumulated depreciation?
No.
No. Can you see? If I take out accumulated depreciation, what does it say? Cost price equals carry value. Okay. So what I'm actually saying to you, in the diminishing balance method, the new one is going to be the same as in the cost price method. Can you see? It's the cost price times the percentage times the months. The difference in the methods comes with the old one. So the old one, I'm not going to use the cost price. I'm going to use the carry value, meaning the cost price less the accumulated. I'm going to do the carry value times the percentage times 12 over 12. So let's do that. If I now go and I look, the new one is 12,000. The percentage is 10. The months is, let's count. Do I count August? No, I bought it the last day, so I start September. September, October, November, December, January, February, 6 months. So this gives me 600. Now the old one. What is the carry value of the old one? And can I show you how easy it is? If I go to my note, the old one is the opening balance. So, am I going to use the 210 or the 180?
The 180.
The 180. So I say 180 times 10%, and it's 12 months, so you can write 12 over 12, or you can just write nothing, and it's going to give me 18,000. So my depreciation is 18,600. Anybody with a problem? You guys show. Thank you. So now if I look at this, let me just move that up a bit. So my depreciation, I calculated 18,600. Okay? My accumulated is going to be the 30 plus the 18. It gives me 48. The 30, can you see the pink? The 30 plus the 18 gives me the 48. Because the opening, it's every time the opening plus the movement equals the close. It's every time. For the cost price it's like that, and for the depreciation, accumulated depreciation. Does that make sense to you? Yes. Okay, so the question is, why didn't I do it the same? Can you see you did everything the same except the depreciation? And it comes in with this thing here where they say bring depreciation into account as follows. Vehicles 20% on cost, equipment 10% on diminishing balance. So vehicles is telling me they're working on the cost, and equipment is working on the carry value. But the new equipment we worked on cost. Why? Because it doesn't have a carry value yet. The carry value and the cost are the same thing. It's only the old one that has a carry value yet, because you need depreciation to have carry value. Does that make sense? Let's finish this. Yes. You are actually adding, because if you say minus 30, okay, so let me go again. Can you see there's orange and there's pink? So the orange works with the cost price. So I'm going to take the cost, plus the cost to give me the cost. Okay? The pink is all in brackets, so I'm going to add it to get the bracket amount. So I take the opening plus the depreciation to give me the closing. Does that make sense? So every time you take the opening, but you keep sort by sort. So the cost price, you do the opening, the purchase, the closing. The accumulated, you take the accumulated plus the depreciation gives me the accumulated at the end. Does that make sense? Okay. So now, I want you to get me this one. Now, can you see there's two ways you can get that one? You can either say the 180 plus the 12 less the 18 gives you this one. Or you can tell me another one. Okay, what do you get?
173,400.
Okay, who can give me another way that I can get the 173? Yes. That's it. Well done. The cost price less the accumulated will give me that one. Okay? And you can also see that's 173 less the 222 will give you the 48. Is everybody sharp?
Yes.
And now I need the totals here. So you're going to add everything vertically. But it must also work. Everything horizontally, but it must also work vertically. So let's do that. So let me quickly do it with you. If I say 400 plus 210, it's going to give me 610.
16.
If I say, please listen, if I say 120 plus 30, it's going to give me 150. If I say 610 less 150, it's going to give me what? 610 because there's a bracket.
460,000.
Can you see? It has to work normal, but it also has to work like this. If I say 280 plus 180, I will also get 460. Can you see it works like this? And it works like this. Okay. Yes. The one that's easiest for you and depending on the information I give you. Okay. Now, 210 plus 12 gives me 232. 222. Okay. The 94 and the 18 gives me 1.
1126.
The carry value, now I can do 460 plus 222,000 less 112, or I can say 396 plus 173. They both will give me the same answer, which is what?
569,400.
Okay? This added up gives me
83200.
This added up gives me
262,600.
And you can see if I say 569 less 832, it's going to give you 262. Or if you say 832 less 262, it's going to give you 569. Can you see everything works down and sideways? Okay.
Yes.